What if I told you that while everyone was panicking about a stock pulling back from its highs, I saw a 25% explosion coming? 10 days ago, I put out a comprehensive analysis on a little-known AI infrastructure company that most investors had never heard of. The stock dropped, the doubters came out, and then boom, a single-day surge of over 25% that left the market stunned. This is Smart Stock Sam, and today I'm breaking down exactly how I nailed this call on Applied Digital, why the recent price action confirms everything I predicted, and most importantly, why the explosive upside potential from here could dwarf what we've already seen. If you caught this move with me, drop your entry price in the comments. And if you're new here, hit that subscribe button because I'm about to dive deep into one of the most validated predictions of 2026. So here's exactly what went down. On January 28th, I published a detailed analysis on Applied Digital, ticker symbol APLD, when the stock was trading near its record high of $42.27. Now I know what you're thinking. Sam, buying at all-time highs sounds absolutely insane. But here's the thing, my thesis wasn't based on some chart pattern or short-term hype. I was looking at something far more fundamental, the complete transformation of this company from a struggling blockchain mining operation into what I called an AI factory landlord. I identified that the market was beginning to understand and aggressively reward megawatt growth over near-term profitability concerns, and I knew this was just the beginning. Fast forward to February 6th, and the market validated everything I said. After some volatility that took the stock down to around $27, which by the way created an absolutely incredible buying opportunity for those paying attention, APLD erupted with a massive 25.5% surge in a single trading session, closing at $34.95. This wasn't some random pump. This wasn't retail FOMO. This was institutional money finally waking up to the infrastructure goldmine that I identified weeks before anyone else was talking about it. Let me break down exactly why I was so confident in this call when everyone else was skeptical. Applied Digital has pivoted into one of the most strategically positioned companies in the entire AI revolution. They're not building chips like NVIDIA. They're not developing software like OpenAI. They're controlling something far more valuable and far more scarce, energized grid-connected real estate specifically designed for high-performance computing. Think of them as the landlords of the AI boom, except their tenants aren't paying monthly rent. They're signing leases worth billions of dollars for up to 15 years. The numbers here are absolutely staggering. Applied Digital has locked in a $16 billion revenue backlog. Let that number sink in for a moment. $16 billion in committed future revenue tied to long-term contracts. This isn't speculative projections or hopeful forecasts. This is locked-in recurring revenue with incredible visibility that most companies can only dream about. The anchor tenant driving this backlog is CoreWeave, which alone signed a $7 billion contract for 400 megawatts of capacity. And here's where the story gets really interesting. NVIDIA, the undisputed king of AI computing, invested $2 billion directly into CoreWeave and made a strategic investment in Applied Digital at $87.20 per share. That's more than double where we're trading today. When NVIDIA puts its money behind your infrastructure, you know you're building something the market desperately needs. But the revenue backlog is just the tip of the iceberg. What really separates Applied Digital from every competitor out there is their time-to-power advantage and technical superiority. As the US power grid becomes increasingly congested with AI demand, getting access to reliable, high-capacity power is becoming nearly impossible. Building new transmission infrastructure can take 4 to 6 years. Applied Digital has already solved this critical bottleneck. They're securing direct utility feeds and building purpose-built facilities from the ground up designed specifically for the thermal and power demands of modern AI computing. Unlike competitors who are desperately retrofitting old warehouses and legacy data centers, APLD is designing facilities from day one for next-generation AI workloads. They've gone all in on liquid cooling infrastructure, which is absolutely critical for the high-density NVIDIA GPU clusters that power modern AI models. These chips run so incredibly hot that traditional air cooling simply cannot handle the thermal load. Their flagship campus, Delta Forge 1 in Dallas, Texas, is a 430-megawatt beast with advanced thermal management that bypasses all the bottlenecks currently delaying legacy providers like Equinix and others stuck with outdated infrastructure. Now, I wasn't alone in recognizing this massive opportunity. Wall Street has been aggressively piling into this name with increasingly bullish price targets. Roth Capital has a $58 target, representing approximately 66% upside from current levels. B. Riley Financial is sitting at $53. Needham maintains a $41 target. Freedom Capital just upgraded the stock to strong buy. Out of 16 analysts covering the stock, 15 have it rated as buy or strong buy. When you see that kind of overwhelming consensus from professional analysts combined with my fundamental research pointing in the same direction, you know something special is unfolding. The recent explosive price action wasn't random either. Applied Digital has been executing flawlessly, hitting milestone after milestone that continues to de-risk the entire investment thesis. On February 7th, the company announced $50 million in senior secured financing specifically earmarked for the Polaris Forge 2 build-out. This kind of project-specific financing shows that sophisticated lenders have confidence in their execution capability and removes a major source of uncertainty around construction timelines that many skeptics were worried about. The revenue growth has been nothing short of explosive. Their fiscal second quarter revenue surged 250% year over year to $126.6 million, driven entirely by the ramp-up of their HPC services. And here's the kicker that nobody's talking about yet. They're in advanced discussions for an additional 900 megawatts of capacity with another investment-grade hyperscaler. This diversification beyond CoreWeave significantly de-risks the entire thesis and shows that the demand for their infrastructure is absolutely insatiable. So here's the big question everyone's asking right now. Sam, I missed the 25% pop. Is there still meaningful upside from here, or am I too late? And my answer is absolutely, unequivocally yes. In fact, I believe we're still in the early innings of this multi-year story. Applied Digital is currently in what I call speed-to-power mode. They're spending aggressively to capture market share before the infrastructure window closes and power becomes even more scarce and valuable. The company is projected to grow annualized revenue from around $200 million today to potentially over $1 billion within the next 3 to 4 years as facilities like Polaris Forge 1 and 2 come fully online and reach full utilization. Management is targeting over $1 billion in net operating income within 5 years, which at current valuations would represent a complete repricing of the equity. From a technical perspective, if APLD can decisively break and hold above that January high of 42.27, I could see a massive institutional repositioning with price objectives targeting north of $50 and potentially beyond. Now, I want to be completely transparent and balanced here because that's what I do on this channel. This is not a risk-free investment. The company carries significant leverage with a debt-to-equity ratio around 125%. Execution on construction milestones is absolutely critical to the thesis. Any meaningful delays could trigger liquidity concerns that would pressure the stock. But for investors with appropriate risk tolerance who understand the risk-reward dynamics, the potential here remains extraordinarily compelling. The bottom line is this. I identified Applied Digital as a transformational AI infrastructure play at the perfect inflection point. The market has validated my thesis with explosive price action that caught most investors completely off guard, and the fundamental story continues to strengthen with each passing quarter as they execute on their ambitious build-out plans. This is exactly the kind of asymmetric opportunity I focus on here at Smart Stock Sam. Finding companies positioned at the intersection of massive secular trends before the broader market catches on and prices in the full potential. If this analysis added value and helped you understand why this call worked and where I see us going from here, smash that like button. Subscribe if you haven't already, because I'm constantly hunting for the next big opportunity. Drop a comment letting me know what stock you want me to analyze next. Until next time, stay smart, stay focused, and keep building that winning portfolio.